Disclaimer, this is not financial advice. Always do your own due diligence before putting your money to work. With that out of the way, let's have some fun and enjoy the episode. What's going on, everybody? Welcome back to another episode of the Rich Off Gains podcast. This is episode 16. It's your boy CB. Checking back in with you guys once again. Happy Money Mondays. Hope you guys are doing well today. Let's get right to it, y'all. Here's how to overcome pressure on your journey to investing. Pressure is a part of any investor's journey. When you first starting out, you're going to feel pressure most of all because you're going to be pressured into selling your stocks and your investments that you're invested in because there's nobody else that's believing into the things that you're believing in early on. So you're going to be pressured early on in your stages of investing to sell shares of your companies and get out of them and try to get into companies that are doing well already and miss out on the possible run-ups. So how do you overcome that pressure? The number one way to overcome that pressure is by staying prepared. Being prepared is doing the research, making sure you have your strategy down pat, practicing and pricing targets on where you see the price going in the stock or the company and where you can see the price dipping at so you can prepare for buys. Being prepared in every single dynamic and way and knowing what ways to overcome said pressure. So, doing the research, doing the simple research, knowing what the company is, understanding the functionality of the company, how the company makes money, and their predicted targets that they see happening into the future are ways to help you get into a position where you're not worried or concerned about the company underperforming when you know where its projected targets are and where they're trying to go. And if they're not hitting those projected targets, you have an idea of where they're at and what they're doing in the current moment so you know what to expect moving forward. A little bit of experience comes into this as well when it comes to having experience in the market and having experience in investing, knowing the fluctuation of the market and how the market moves in different seasons and different times of the time periods of the year, where certain times of the year the market isn't moving as fast or as flexible or lucid as it would in the holiday season or different time periods like that. Knowing the stock that you're invested in, meaning the sector that it's in, how well that sector moves in a certain time period. All these different things are ways to be prepared into going and undertaking pressure whenever invested. So bottom line is being in a position where you're fully knowledgeable, fully experienced, and fully prepared for pressure is how you can overcome pressure. If you are in a better position now, going into the investment, you will see a better return just from being prepared. Putting in the time now, putting in the time early, and putting in the effort and energy early to get said information, said knowledge, and said experience will help you overcome the pressure. Hopefully that helped you guys out. With that being said, let's move on to the day trading tip of the week. You want to have as much exposure to the charts as possible. You need to be looking at charts all the time, as much as you can. Study the charts and observe the charts, but particularly observe the charts that you trade and invest in every single day. The ones that you day trade every single day are the charts that you want to study and monitor and look at, and just learn how the fluctuation moves even when you're not trading. I'm not saying look for trades all the time. I'm just saying look at the chart, understand the chart, digest the chart, and really digest the movement and the flow of how the chart moves throughout the week. You might notice new things and new patterns that you might see that can help you create a better edge for your investing strategy or your day trading strategy. If you're looking at the charts for a certain period of time, it helps you see new ways that the market moves and gives you a better approach to your possible strategy that you already have or something that you can possibly add to your strategy just by doing the due diligence and putting in the screen hours to looking at the charts. So using your time by studying the charts and doing your due diligence and sitting there just looking at charts and observing the movement of the price action will help you create a better edge for your day trading strategy and even your approach to how you might go about getting into a good quality setup to now see a better return. So make sure you're doing your due diligence and making time for looking at the screen, having some good screen time, and looking at the charts that you trade on a day-to-day basis for better conviction, better edge, and just a better overall approach. Again, this does not mean you need to be trading at all times. This is just simply you getting the screen time of looking at the charts and understanding what you're seeing, observing the charts, not looking to take a trade, but just simply observing the charts and looking at the price action, understanding how the price action flows, how it's moving, understanding a good day from a bad day, being able to distinctively tell what's a good day and what's a bad day, being able to identify a good setup from a bad setup and how your setups coexist within that chart. And if that's a good chart, then you'll be able to see plenty of opportunity. If it's not a good chart, you can always just move on to the next chart and look at other charts. This is also a perfect time for you to observe other charts as well. Scour the charts. There's so many stocks on the stock market. You can look at so many different charts and observe and study which ones are flowing and moving really well that might align with your strategy. So getting the screen time just allows you to experiment and test out new strategies and observe the price action that you're seeing more on a consistent basis and longer basis for you to identify a better edge in the market. So try that out. Let me know how that works for you guys. Hopefully that helped out any of you guys who are day trading. Having more screen time can definitely increase and improve your ability to have better trading outcomes. It's been a while since we talked about Trump, but Trump has had two major headlines within the last 4 days. At the time of this recording, the market is closed, so I'm not entirely sure how the market's responding to the second headline, but the first headline was released on Friday, where the Supreme Court voted Trump's previously imposed tariffs on the global economy as illegal. And the market had a positive response to it initially going into the Friday session. We saw some upside movement going into Friday, and we had a really, not a strong day, but just a good day in the market overall. However, on Saturday, Trump then responded by imposing a 15% global tariff on the economy. Now, I don't know how the market responded to this. If I had to guess, given the history of how the market responds to anytime Trump imposed tariffs or announced that he was imposing tariffs on the economy or different countries, typically the market had a negative response on those articles. So my guess is that the market had a negative day going into Monday. Comment below how I did on my prediction. Let me know if I was right. Let me know if I was wrong. I'll probably make a repost or do something like that, announcing whether or not I was right or wrong. But let's talk about it. What does this mean going forward? How can we benefit from this if the market does see a pullback? If you guys want more tips and tricks about day trading and investing, make sure to click the link in the bio, www.continuebelief.com. I share a lot of free resources and tools, tips and tricks about how to day trade, how to get started investing, and so much more. So make sure you guys check out the link in the bio. Thank you guys so much. Make sure to leave a like and follow. And yeah, see you guys later. In my opinion, if the market is going to see a pullback, this presents opportunity for investors to get into their companies that they like and love, and the companies that people have been targeting to get into as of late. We have been seeing continuous hold in range for SPY at least, between 675 and 696. So if we break that 675 threshold, we can be in store for a continued pullback, a decent pullback to a downside move closer to 650, if not lower. And if we do get that, then that would just correlate to the tech companies and all the other major companies that the S&P 500 holds, as result to another drawdown on the side of them as well. So if and when we do get that pullback, it would be a good buying opportunity for investors to get shares of companies that they've been watching and wanting to see pull back, and that would not be a bad time to look to buy. So if we do get a negative response in the market on Monday or going into this week, I would be definitely keeping an eye out for a decent discount on some really good names in the stock market. particularly the great companies, the companies that are great in the market cap, the top 10 leaders of the market cap and different things of that nature, even the top 20, any of those companies that have a pullback of 20% or more is a great buying opportunity. 30%, 40% or more is even better, but 20% is not bad at all. So keep an eye out for a pullback of that percentage for companies like Apple, Amazon, Microsoft, Tesla, Google. We've been seeing a little bit of those pullback. Last week, we saw a little bit of those pullbacks. So going into this week with this news, if this news is a negative response to the market, we could see lower. So keep an eye out for those companies that I mentioned, even NVIDIA, and they have earnings reports coming up this week as well, which I will talk about here shortly. But yes, those are my thoughts on the news that's happening regarding Trump and the tariffs. Comment below what you guys think. Let me know what your guys' thoughts are on those topics. I think that it's very interesting to see Trump do what Trump does best and just have his controlling mechanisms and ways that he goes about, strong arming and bullying the political system. You know what I mean? So it's very, very interesting to see. I guess he's playing this one by the book, the global tariffs, because they're not like a crazy increase like the 140 tariffs that we were seeing in April of last year with Liberation Day, and the insane markup of tariffs that he was trying to impose on different countries like China and Canada. So it will definitely be interesting to see how the market responds to just a 15% tariff. Like I said, in my opinion, just giving off history, even though it's 15%, I think that the market will still have a negative response because the market's been looking for a reason to sell. We haven't had too much of any reasons to sell. We've had different data and, economic reports come out, but there hasn't been anything strong enough to really push the market in a negative direction. Now, this might be nothing crazy, but as I said before, Trump typically, when he reports these kinds of reports, it typically has a negative impact on the market. So that's just my prediction. We'll see how the market, plays out this week. And that's really all I got for that. So all we can do is just wait and see, but definitely keep a lookout for those great companies in the market to have discounted prices going into this week, if not later in this week or even later this month going into March. So just keep an eye out for that, and comment below the companies you guys are looking for a strong pullback on. Me personally, the company that I'm about to talk about next is one of the companies I'm looking for a pullback on, which is NVIDIA. NVIDIA has earnings coming up this week. What do I think the performance of the earnings report will be? I think that NVIDIA will have a good earnings report, but I think that the market will still respond to the earnings report negatively. So, in result to a good earnings report, we will probably see a negative response via a pullback of, we'll say, roughly maybe 5 to 10%, in my opinion. And the reason for that is we've been very, very consolidatory and just range bound between a valuation of 194 and 170. So I think we'll break that 170 level and push a little bit lower. And then once we push lower, we'll then possibly see a strong bounce off of the low of like 150. That's my target price. If we get to 150, I'm looking to buy more shares. And once we reach 150, I think we will see a reversal and push higher, given that we're having the tariff news come out and given that they're reporting earnings. And also, just going off of the trend that we've been seeing with tech, they haven't had the strongest. They've had strong earnings reports, like Google had a really strong earnings report. But even with the strong earnings report, it pushed up in the market the next day, but then after the push up, it then rejected and reversed off of supply and came back down lower. So currently it's lower than where it was the week before. Google's lower than it was the week before earnings report. So I think that the same thing applies to NVIDIA. Even with other tech companies like Microsoft and Amazon, we've seen them have good earnings reports, but their forward earnings call, the earnings call that they had, the meeting that they had, wasn't positive. And so for Amazon, I think that their announcement of the CapEx and AI spending was what dragged them down. If NVIDIA reports something along the lines of the same thing with their CapEx and AI being an increase in spending, it could possibly impact NVIDIA negatively and cause it to pull back as well, even if it has a good earnings report. So that's just my thoughts and my predictions on what I think that NVIDIA will do. It's not financial advice. Don't take that with a grain of salt. I'm honestly just looking for a pullback. I think it's still a great company overall. Top 3 companies in the market cap. So you really can't go wrong with NVIDIA. It's just that it's been range bound and it doesn't have much to go off of to push higher. Now it could have an outstanding earnings report and just break out and go higher, which would be good as well for those who are invested in holding for the long term. So you might miss out on that if it does push higher. But if it has a pullback, then my target price would be around 154, possible buying. Comment below what you guys think. Let me know if you guys think that we will see a pullback or a push higher in NVIDIA. And honestly, I think that it'll possibly affect the overall semiconductor market and sector. If NVIDIA has a pullback, then we'll see names like AMD pullback, Avgo pullback, TSM pullback, MU possibly, even, SanDisk, all these different names see some pullbacks if NVIDIA has a negative, if the market responds negatively to NVIDIA's earnings report. There was one point in time where NVIDIA would, anytime they reported, it would always exceed the expectation, and their reports exceeded the expectations extremely, and that's what caused the insane run-up we had in 2023 where we saw NVIDIA run from $400 to over $1,200, and then we saw the stock split. That time period is over as of right now. The numbers are still good, but they're not great. It's kind of like LeBron James playing in the NBA. He's a good player, and he has such good stats that we overlook his player stats, and he averages basically a double-double every game. He has good assist rate, good points per game, good rebounds per game, and yet we expect more from him. It's kind of the same thing with NVIDIA. We expect more from NVIDIA being the leader in the AI GPU space, and it's set their bar so high, their standards so high that their reports that they report are, if they don't exceed the expectations great, then we won't see a strong push higher. So that's my reasoning why I think that we'll see lower on NVIDIA. But like I said, comment below, let me know what you guys think. And with that being said, that is it for this episode, you guys. I hope you guys enjoyed this episode. I want to give thanks to God for always being by my side, allowing me to make these kinds of episodes, being able to educate and teach other people on the stock market and investing. I'm blessed to say that I have the ability to do these things and just be knowledgeable in this space and be able to speak life and energy and speak information and give back to other people. So hopefully you guys find value in this, and hopefully this adds value to you guys' portfolios, and you're able to make great investments and great choices with said knowledge. But with that being said, I hope you guys enjoyed this podcast episode. Make sure to bookmark or subscribe wherever you're listening to this, whenever you're listening to this. Happy Money Mondays. Stay blessed, stay safe, and I'll see you guys later.